Whitman did try to lay out where the company goes from here. Our senior West Coast correspondent, Jon Erlichman, has more on the Whitman plan, so to speak. Jon, what did you hear on that call today?
You know, this is somebody who laid out a very clear plan, actually, Emily, and the board was probably happy with Meg Whitman today because they had labeled her the communicator. Sometimes CEOs will fumble through that first 5 or 10 minutes when they come out with an earnings call. Not in this case with Meg Whitman. She said she's been traveling around, and all she has kept hearing is, what is HP? People want clarity on that, and that's what she's trying to deliver. You highlighted that she said this is not a software company. Sure, we own software, but it's for the broader part of our business overall, and that we are focused on getting better results. The results have not been there, and now it's about bottom line performance. In fact, we're throwing out sales guidance. We're just going to focus on bottom line guidance, and for the meantime, it looks like at least analysts and investors appreciate a little bit of clarity. It feels in some ways like the Mark Hurd days. Of course, the bottom line performance under Mark Hurd.
Meg Whitman has a lot to prove, though. Jon, what have you heard about how
Yes.
she actually feels about this new position? She was on the board before, but she certainly has a big job ahead.
Well, she wanted this job, and my sources say she loves the spotlight. And obviously, she wouldn't have run for the governor of California or run eBay as long as she did if she didn't like this kind of opportunity. But obviously, the huge difference between eBay and HP is during the eBay years that she was there, it was a rapidly growing company. HP is not that kind of company. And you mentioned with Corey the fact that the PC business, still the biggest part of their business, is not making them a lot of money. The Thailand fund's another issue, the economy a big issue. And so whether or not investors stay enthusiastic over the next 3 months is certainly a story. One earnings report does not make a full year. Back to you.
We'll see if she loves the spotlight a year from now. Thanks for that, Jon. For more on Hewlett-Packard's report and its future under Whitman, let's bring in Brian White, Managing Director of Equity Research at Ticonderoga Securities. Brian just got off the conference call as well and joins us now by phone from New York. So, Brian, got to ask your first reaction to Meg Whitman's performance on this call, though it's more about what she does than what she says. What's your read on this?
No, I thought she did a great job on the conference call. She's in a tough situation with a turnaround story that's meeting some macro headwinds. But in terms of talking to the street and telling investors what they want to hear, I think she did a great job. She wants to get HP back to the basics. And this is focusing on EPS growth, free cash flow growth, less on revenue, investing more in R&D. And she's not going to do any big deals in fiscal 12.
It certainly seems like we're seeing the outlines of her master plan starting to unfold. But where does the plan go from here? How does she get the stock price back up and the company back on track?
Well, I think it's, I think we're in a transition process here that could last anywhere between 12 to 18 months. Number one, the company was underinvesting from fiscal 05 to fiscal 10, especially in services. So you had some very negative things to say about services margins going forward. Second thing is this company has 36% revenue exposure to Europe, and I think a lot of the austerity programs out of Europe haven't kicked in. We're going to hear more about it, I think, next year. And finally, we've got a PC market and even somewhat of a printer market that seems to be in a secular decline. IPG had a very disappointing quarter, and revenue was down 10% year over year. So there's a lot of different forces at work here that she's going to have to work around.
Also, HP's cash position, pretty low. Would you say it's dangerously low? And how much of a concern is that?
So as we exited the third quarter, they had a $13 billion net debt position. Most companies in technology have big net cash positions. As we exited the fourth quarter, this quarter, they had a net debt position of $22 billion. And that's due to the autonomy transaction with the debt to cap of 44%. So I'd say for a technology company, they're pretty levered up. And you have to remember, when they have a cash balance of $8 billion, most of that is still overseas. So I think what they said on the call is they want to take fiscal 12 to start working down some of this debt. And I think, the share buybacks will continue. I don't think they're going to be that aggressive over the next year.
Any indication, Brian, on the future of WebOS, the operating system that was on their ill-fated touchpad tablet. There had been reports that HP planned to sell it off. HP disputed their reports, but certainly the future of this division very uncertain.
Yeah, it's uncertain. I think when they've essentially shut down the device piece of it, so you've got this OS piece of it, and what do you do with it if you don't have devices? We'll have to see. I don't know what the end game will be. I think a licensing model would probably make a lot more sense long term.
Brian White of Ticonderoga Securities, just off the HP earnings call. Thanks for joining us here on Bloomberg West.